Lam Research Corp, trading under the ticker symbol LRCX on the NASDAQ, is currently priced at $238.80 USD, reflecting an intraday increase of $0.34 or 0.14% as of the current trading session on Wednesday, January 28, 2026. This slight upward nudge occurs in a climate of intense anticipation as the market is braced for the company's second quarter fiscal 2026 earnings report scheduled for release immediately after today's closing bell. While most of the financial world focuses on the big names like Nvidia stock or the recent volatility in Tesla stock, the real heavy lifting in the semiconductor space is happening in the specialized world of wafer fabrication equipment. If you think the gains in Apple stock are impressive, you haven't looked closely at the bottleneck that Lam Research effectively controls. The immediate insight that most retail investors are missing today is the 2026 etch intensity supercycle. While the headlines are often dominated by the latest AI software or consumer gadgets, the physical reality of building chips at the 2-nanometer and sub-2-nanometer level has created a massive technical wall. We're seeing a transition to what engineers call gate-all-around transistors and the rise of 16-layer HBM4 memory. In this environment, the precision required to carve out microscopic features on a silicon wafer has reached a point where Lam Research's dominance in etching is no longer just a competitive advantage, it is a necessity for the survival of the entire hardware ecosystem. The expectation in the market right now is that Lam is a cyclical play that might be nearing a peak, but the reality is that the transition to these complex new architectures is fundamentally changing the amount of equipment needed per wafer, which could drive a structural step-up in their baseline revenue. Most people looking for investment help or exploring various investing sites tend to focus on the end product companies. However, if you look at how professionals manage an individual brokerage account or an intelligent portfolio, they're often eyeing the suppliers. When you use tools like Schwab Intelligent Portfolios or browse the Fidelity mobile app for long-term growth, you see that the companies providing the tools for the chip makers are the ones with the most durable moats. Right now, the common ground among investors is a sense of nervousness regarding the Chinese market. The belief is that trade restrictions and shifting regulations in that region will act as a permanent anchor on Lam's growth. But here's the contrarian take. The explosive demand for HBM4 memory stacks and the massive capital expenditure plans from TSMC in Arizona and Taiwan are more than making up for the geographic headwinds. We aren't just talking about more chips, we're talking about chips that are exponentially harder to make. Looking at the recent daily swings, we have seen Lam Research gain significant momentum over the past 30 days, outperforming much of the broader technology sector. The trading volume has been robust, indicating that institutional activity is ramping up significantly ahead of tonight's numbers. We have seen major players like Norges Bank and Arrow Street Capital increasing their stakes, which suggests that the big money isn't afraid of the current valuation. Even though the price-to-earnings ratio is sitting near historical highs, the forward-looking sentiment is buoyed by the fact that global wafer fab equipment spending is tracking toward a staggering $126 billion for the 2026 calendar year. This isn't just a ripple, it's a massive tide. If you're using a Fidelity trading platform or an interactive broker's account to monitor these trends, you'll notice that the sector momentum is shifting away from pure-play designers and toward the companies that enable the manufacturing of the next generation of silicon. The expectation versus reality tension is particularly visible in the memory market. Most analysts were stuck in a 2025 narrative where they expected a standard recovery. Instead, the reality has been an explosion in NAND and DRAM upgrades. As memory stacks get taller, going from 128 layers to 256 and beyond, the margin for error shrinks to almost zero. This is where Lam's Cryo 3.0 etching technology becomes the primary solution for the industry's most difficult bottlenecks. When you look at your SoFi Invest or Robinhood app and see the daily moves, it's easy to get caught up in the noise. But if you step back and look at the institutional moves, like those seen on the Interactive Brokers platform, the narrative is much clearer. We are in the middle of a massive hardware build-out that hasn't been seen in decades. Let's talk about the business model for a second, because it's important to understand why this company has such a grip on the industry. Lam Research doesn't just sell a machine and walk away. Their customer support group business represents about 30% of their total revenue and provides a very stable recurring revenue floor. This is a massive point of stability that you won't always find when you are self-investing or looking for online investing opportunities in other high-growth sectors. These service contracts mean that as long as the fabs are running, Lam is getting paid. This makes them a digital blacksmith. They provide the anvils and hammers that the modern world uses to forge its most valuable asset, data processing power. Even if you're using something like the SoFi active investing tools or the interactive brokers trading features to make quick moves, the long-term play here is about the technical lock-in. Once a chip maker like Micron or Samsung integrates a specific etching process into their production line, it is incredibly expensive and difficult to switch to a competitor. This creates a moat that is very difficult for new entrants to cross. In recent earnings calls, the management has been very clear about the fiscal 2026 outlook being weighted towards the second half of the year. This means that today's price of $238.80 might actually be reflecting a period of transition before the full impact of the 2-nanometer ramp-up shows up in the financial statements. Compared to the broader market, Lam has been a standout performer this year. If you compare it to the performance of some of the popular Fidelity ETFs or Fidelity mutual funds that focus on large-cap tech, LRCX has often been the engine driving those returns. While many retail investors are still focused on finding the next big thing on various investing sites, the smart ones are looking at the companies that have already become indispensable. Whether you were using Fidelity Investments for your long-term retirement planning or a Robinhood stock trading account for more active plays, the importance of understanding the hardware layer cannot be overstated. The shift towards AI infrastructure isn't just a trend, it's a fundamental rebuild of the global computing stack. Now, it's important to address the risks because no investment is a sure thing. The main headwind remains the regulatory environment in China. Management has already signaled a potential $600 million impact on their annual revenue due to new rules. This is the reality that often clashes with the hype you might see on social media or some of the more aggressive online investment forums. But when you look at the sheer scale of the investment coming from other regions, like the $100 billion memory complex in New York, the math starts to look very different. The tension here is between the short-term loss of a specific market and the long-term gain of a global technological transition. I want to pause here for a second and get your take on this. Comment below how many shares of Lam Research you are currently holding, or if you're waiting for a post-earnings dip to enter. Also, do you think the current price targets from analysts like Citi or Deutsche Bank, which are reaching as high as $265, are realistic given the current PE ratio? It's always interesting to see how individual investors are viewing these high-valuation chip stocks compared to more traditional plays. Looking back at the past performance, Lam has consistently beat both earnings and revenue estimates for the past 2 years. This track record is why many people seeking investment help or using a SoFi robo-advisor often find this stock recommended in aggressive growth portfolios. They have managed to maintain record-high gross margins of over 50%, even while increasing their R&D spend to stay ahead of the competition. This level of operational efficiency is rare, and it's one of the reasons why the institutional ownership remains so high at over 83%. When the big funds at Fidelity Wealth Management or those using interactive brokers for large-scale trades stay committed to a stock through periods of volatility, it usually signals a high level of confidence in the underlying fundamentals. As we move into the final stretch of 2026, the focus will shift entirely to the angstrom transition. This refers to the next level of miniaturization beyond the nanometer. The tools required for this are even more complex and expensive than what we have today. This means that the content per wafer for Lam Research is only going to go up. While you might see some noise in your Robinhood investments or your SoFi stocks list when the market gets volatile, the core narrative for Lam remains the same. They are the gatekeepers of advanced manufacturing. Whether you are managing your own Fidelity IRAs or using the interactive brokers platform to hedge your positions, understanding this technical moat is the key to seeing through the market's temporary fears. The contrast between the market's expectation of a slowing growth cycle and the reality of a technical supercycle is the most important takeaway for today. People are worried about the when, but the industry is focused on the how. As long as the demand for faster, more efficient chips continues to rise, the companies that make the machines that make those chips will remain in a position of power. The investment you make today isn't just in a stock, it's in the physical infrastructure of the future. When you look at the data on your Robinhood app or check the analyst reports on your Interactive Brokers account, remember that the numbers tell a story of physical limits being pushed by specialized technology. To wrap this up, the central insight here is that Lam Research is currently a victim of its own success in terms of valuation, but its technical dominance is only increasing. The expectation of a China-led slowdown is being countered by the reality of a massive global upgrade cycle in memory and logic chips. We have seen how the company has managed to maintain its margins and outpace the market, even with significant geopolitical headwinds. The move from